Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the euro versus US dollar as the market slows into the close for the day. But let's set up for tomorrow. And with the non-trending session today, let's look for what might the technicals be saying about tomorrow. So let's get started. All right, looking at the 4-hour chart, what do we notice? Well, the high price was in the Asian session that came in around the 1.09097. Let's call it 1.0910. The low price was also reached, well, in the European session at 1.0878, maybe in the early New York session as well. And so the difference between those two levels is what, 22 basis points plus, or pips plus 10. That's the 32 pips. It's not a big range here for the euro versus US dollar, well below the 22-day average. Now, technically, what are we looking at? The high price that we saw in trading here today did stall against the low price from not last week's trading, but the weeks before trading. The price could not get above that level, could not move toward the 200-bar moving average on the 4-hour chart, and the price started to rotate back to the downside. Now, on the downside, we've moved down into this swing area down here, become between the 1.08788 and 1.0894. The low price for the day again came near the low of that swing area. And if the price is going to go lower, we need to get and stay below that level. We did do that in last week's trading, getting below this old swing area through here. But the momentum could not be sustained after reaching down toward the 200-day moving average. It's green overlay light on this chart. So going forward, what do we need to do? And what's going to kickstart this price action outside of the narrow trading range? Well, one, get below the 1.0878 level. Two, on the downside, would be getting below the 200-day moving average. And then three, would be getting below the 50% retracement of the move up from this end of October low to the December high. That level comes in 1.08276. If those things can be done, then we also have this swing area down to 1.0803. So let's say getting down below 1.08 is certainly a possibility for the euro versus US dollar this week. After all, we're currently just trading at 1.0887, which is only 87 pips away from the 1.0800 level. That's not a lot of move. But there are a lot of things along the way that need to happen, including getting below that 200-day moving average. Now, if the price should go higher from here, what would we need to see? One would be to get back above the 38.2% retracement. That's this level right here at 1.090901. Then to get above the high price that we saw in trading here today, and that we saw that was the low price 2 weeks ago, 1.097. So that would be one. And then we start to look toward the 100 and 200 bar moving averages on the 4-hour chart to get through and through. The higher one comes in at 1.09427. So with the current price trading at the 87 level, that's only 55 pips away. So certainly a target that could get to and through to increase the bullish bias and hopefully see further momentum in the direction of the upside. So the battle lines are set. The thing is that we get kind of caught within the minutia of a 32 or so pip trading range for the day and think that, wow, if we can get to that 200, that would be a huge move. But really, it's just a modest move to get down to and through there. Moreover, getting above the 100 and the 200 and 100 bar moving average on the 4-hour chart is something that is really doable for the euro versus US dollar trader. So don't be scared. Just look for those breaks, look for those momentums in the directions of the break, and we'll see if that can get that follow through buying or selling this week. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.